Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the HREBA show, homeownership, hear it from the experts.
And here on the HREBA show, we bring experts in their respective field to give you information as to the home buying process, if you're sustaining your home or if you're looking to sell your home.
Covering all the industry, lenders, realtors, title company, escrow officers, insurance agents, all volunteering their time to bring you information that you can use. Our guests are experts when it comes to home ownership, whether you're buying for the first time or whether you're maintaining or sustaining the home you currently have.
Or selling.
Home ownership, hear it from the experts in the Blue Stream.
Jump in.
Hispanic Real Estate Brokers Association, and thank you for listening. My co-host today
is Salvador Villalobos.
Thank you for being here, Sal, and we are excited about our guest. We're always excited. Every week we're excited about our guests.
Especially when they show up.
I always say I'm excited because it's this exciting information that we bring to you listeners. So today we have our guest is Sandi King-Brauer. Sandi is with King Financial Services in Arlington. Mm-hmm. And she is an IRS enrolled agent, and it's tax time, people, right? So we're excited to have Sandi here. She's going to share her expertise from many, many years. And so let me start off by asking you, Sandi, what is an IRS enrolled agent?
Good question. A lot of people in Texas don't know what that is. So an IRS enrolled agent is the only federally licensed person from the IRS federally licensed designation. So legally, we're probably up there with tax attorney or a CPA, but we're different in the fact that we can service anybody all over the United States and Puerto Rico, where an attorney or a CPA can only work with a person in their state. So our testing is a little bit more different. Our education is different, and the fact that CPAs, 80% of their education is in accounting and auditing, and 20% is in taxes. There's only 16 questions on their CPA exam on tax returns.
Wow.
So, and of course, an attorney doesn't have any education in taxes. Mm-hmm. So an enrolled agent's 80% in tax law and tax representation and 20% in accounting. So we're there to provide tax expertise and tax planning. Congress calls us the tax experts of the United States. So if you do call an IRS and you're having issues with them, they won't tell you to go find an attorney or a CPA. They'll tell you to go find an enrolled agent in their area.
That's
because
great.
We talk the same language.
Okay. So let's say they say that. Go find a IRS enrolled agent. Where would they go? The
best place to go is the National Association of Enrolled Agents.org. It's a nonprofit, and it'll direct you to an enrolled agent in your area that's licensed, and their credentials are up to par, and they're passing all the testing. And we have 30 hours of continuing education every year, and the National Association of Enrolled Agents makes sure we take all of that.
Okay, so is there an acronym to that?
NAEA.org. NAEA, National Association of Enrolled Agents.
All right.
And there's a Texas one, and there's a local DFW one also.
Okay.
Right. So you can call either one, or
any of them,
and they can help you just to see.
Yep. And actually online, you'll put your zip code in, and they'll tell you all the enrolled agents in your area.
Now, here's maybe a personal question, but is the charge different from area to area, or from enroll agent to enroll agent? Do they set their own fees, or is it universal?
It's just like a CPA or a law firm, set their own fees.
All right, good.
But we know what the averages are.
All right.
We know what, every area is a little bit different. I have an office in California and I have an office in Texas. And so, of course, California has California tax returns to go along with it. So the fees are a little bit different there.
Great.
New York is different. Of course, when I do a New York tax return, oh yeah, it's different.
Oh, gosh.
So you're also doing federal and state, or just federal?
Oh, federal and state. And I personally do about 18 different states tax returns right now.
Wow.
And of course, when I specialize in small businesses, so for instance, if somebody works in 15 different states, a corporation does, you have to do each state's tax return for that corporation. So I've actually had a tax return that was about 18 inches thick.
Wow.
Depending on all the states.
That's impressive.
It's fun.
So,
Okay, so let's get into the nitty gritty. How about it? Nitty gritty. Let's go.
all right.
Not every one of you out there listening have done your tax return yet. A lot of you have, and you've received a refund. So for let's say somebody has already done their tax return, Sandy, they can amend a return, correct?
Well, it's not even an amendment if you do it before April 15th.
Oh, okay.
It's just a restated tax return. So you can actually send it in and say it's restated, and it's not even considered an amended return.
What can
You actually put superseded across the top of it, and that states that this supersedes the one that was electronically filed.
So what actually constitutes a reinstatement?
Or a superseded one. It's just any
superseded.
change that you want to make after you filed it, but before April 15th. It has to be made
Regardless
before
of what
April
it
15th.
is.
Right. Regardless. It has to be a tax change.
Right.
I mean, it has to actually affect your taxes. There's some things that are on there that are just for information purposes, and you don't do an amended return or a superseded return for that. You just do it if there's a tax change.
Okay.
Okay.
Now, how about amended returns from previous years?
Yeah, that's because it's after April 15th
Right.
of that year. So, yeah. And you can do an amended return for up to 3 years back.
Okay.
Now, if you're still responsible for filing your tax returns before that,
Mm-hmm.
but you can't receive any refunds from before 3 years. So that's the problem with that. But they still want you to file your tax returns. And of course, if you owe money, IRS wants their money.
Of course, right up front.
Right.
So you can amend. When should somebody amend their tax returns?
If there's any change that was wrong, if there's anything wrong on that tax return,
Okay.
if they got another 1099 in the mail or another W-2 in the mail that they forgot about, that's generally what happens. And we do an amended return or a superseded return for that.
What if somebody did their own taxes and overstated their income, and actually they're entitled to a refund after somebody?
Same thing.
Same
You
thing?
do an amended return. The problem is you're not going to get that refund for probably 3 to 6 months.
All right.
So depending on the time of the year, I usually tell people just to have it applied to your next year's tax return.
And they won't give you interest on that, I imagine.
Well, they do.
Oh, they do?
Yeah,
Wow.
they don't pay you as much as they charge,
Oh, okay.
but they do give you interest. And then you'll get a 1099 for the interest they paid you, so you can claim that as income for the following year.
Oh, that's beautiful.
There's nothing for free, especially in taxes.
All right, Sandy. So what recommendations would you have for someone that has not an individual, just individuals right now? We can talk about small businesses in a minute, but just individuals that have yet to file their tax return. What recommendations would you give them to gather all their information or something?
Well, anything that's being reported to the IRS, they need to bring it to their tax professional or know that it has to be on their tax return, no matter what it is. If it's a 1099-R or 1099, anything that they get, it has to be put on their tax return, because the IRS, anything that's reported to them, they're trying to match that up. Now, it probably will take them close to the statute of limitations, which is 3 years, before they actually find that error, because that's how long it takes. But when they find it, you have the interest for that whole amount of time.
They don't forgive anything.
No, they don't forget the interest. So, you want to get that change done as quickly as possible.
So
if
you
you
would
forgot something.
Yeah, so you would say, get your ducks in a row, make sure you have everything, because we don't want to get audited in any way.
Well, it's not a matter of being audited. It's just a matter of being truthful and being accurate. You want the accurate, so because if they decide that in 3 years that you owe more taxes because they've made a change on it and you didn't report that, the statute of limitations starts at that time for that amount of money. So the statute of limitations is 10 years. So it would start when it's assessed or when the tax return is filed. So if they assess money in 2 years or 5 years or whatever, then that statute of limitations starts from there, although we want to get the taxes paid.
Yeah. And that brings up a point, because I've seen this happen in the past with a friend. You are responsible for what your preparer puts on that tax return.
It's
right?
your tax return. It's not the preparer's. It is your tax return. It is a legal contract between you and the government. Some countries don't even allow a tax return to be prepared unless it's an attorney that does it. So you really it's really, really important that you have a licensed professional prepare your taxes, and you know everything that's on there, and you go over it with them. So you don't want to have somebody that has never had any education or any testing to prepare your tax return. Most states require you to have some kind of licensing. New York, you have to be an enrolled agent or an attorney or a CPA before you can prepare taxes. California, they have another special system that's called CTEC that you're licensed. Texas is one of the few states that anybody can hang a shingle. They don't have to have any kind of permission to do that, or any kind of preparation or any kind of training.
And that's when you get the ghost preparers?
Yes, and they say self-prepared on the tax return,
Right.
but here's your $600 bill. That's what they do.
Right.
Or they'll take TurboTax and they'll just keep making a new user and login and keep doing another tax return, another tax return, another tax return. And then if there's an issue, you can't call TurboTax because you're not the owner of that account,
But you're the owner of that mistake.
of that tax return, but
Yeah.
you are the owner of the mistake.
Yeah.
And so with a tax professional, we are responsible for any interest or penalties we caused you.
Are you like a fiduciary then at that
Yes.
point? Okay.
Now, the additional taxes that are due, you would have been responsible for those anyways.
Right.
Those aren't our responsibility. But for any interest or penalties because of the mistake, we are responsible for, and we take responsibility for that.
Great.
Nobody's perfect. We all try to be perfect.
Right.
But there's sometimes things slip by.
All right. That's good.
But it's really important to have that professional.
So what happens if they do go to a ghost preparer
Mm-hmm.
and there are issues?
That's the first time, Sal, I've heard of a ghost preparer.
I brought it up before. You just didn't want to talk about it.
What is
just
a
joking.
seriously? What's a ghost preparer?
Unlicensed.
Okay, so
Unlicensed.
an
Somebody-
unlicensed, just someone that put up a
Right.
shop.
I have a
Okay.
family friend who does tax returns for people and
Okay.
charges and makes some extra money type of thing.
Okay, got
They've
it.
never had
Because
any
our
training.
listeners may not.
They really
Right.
don't know what they're doing.
Yeah.
And right.
They think they do, or they know enough to think they do.
And sometimes I've heard that they've actually direct deposit the money into their own personal accounts
Yeah.
and then give the taxpayer very little from that.
IRS has changed that. As of a couple of years ago, you can't have more than 3 tax returns put into your account. And it's called criminal investigations at that point.
Oh, good.
And
good.
you'll have somebody with a gun showing up at your door.
Good, and a badge, I hope.
Yes. And a badge, yes. Yeah.
All right.
So they really have changed that. And you have to have the name of the tax preparer on the bank account before it can be deposited
Oh,
into
that's
the
good
account.
to know
Yeah.
because
So
there were
they
so
have
many
changed
people
that.
that got taken advantage
Mhm.
of that. So that's good to know, especially in communities that are of lower means. That's prevalent.
Yeah, identity and identity theft has really been one of the top issues with the IRS. They've made a lot of changes in the last few years. One of the reasons why you've probably heard about the fact that nobody got their refunds until February 27th, especially if you had any of the credits, the child tax credit or the American Opportunity Credit
All right.
on them, because the IRS was matching up the W-2s and 1099s with the tax returns.
Oh, that's good.
And they also wanted to make sure that people that had a divorce situation where it used to be whoever filed first got the kids. Now it is where if 2 people file before February 27th and they both are claiming the kids, then nobody gets the money until it's resolved.
Oh, so they just hold on to it.
They hold on to it,
With
which is
interest?
really better. There's a lot of single parents out there, male and female,
Right.
that got taken advantage of by the other parent that aren't paying child support or taking care of the kids. But they have the Social Security number and the birth date, and
Oh,
they file for the kids.
that's
And it used to be you had that single mom who would fight it, but it would take 6 to 8 months before she got a refund.
Great information, Sandy.
Definitely.
We're talking to Sandi King-Brauer with King Financial Services, and we're going to take a quick break. And when we come back from break, Sandi is going to give us more information about small businesses and what they should watch out for and what should they take advantage of also when it comes to doing their taxes. So we're going to take a quick break. If you want to join the conversation, if you have any questions for Sandi, please call us. The number is 214-431-5032. She'd be happy to answer your questions. She's an expert. We'll be back after the break.
a license expert.
Hey, this is Leticia.
And this is Matt. Catch us on The REBA Show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the REBA Show, homeownership, hear it from the experts.
And here on the REBA Show, we bring experts in their respective field to give you information as to the home buying process, if you're sustaining your home or if you're looking to sell your home.
Covering all the industry, lenders, realtors, title company, escrow officers, insurance agents, all volunteering their time to bring you information that you can use. Our guests are experts when it comes to home ownership, whether you're buying for the first time or whether you're maintaining or sustaining the home you currently have.
Or selling.
Home ownership, hear it from the experts in the Blue Stream.
Jump in.
Programming for the REBA Show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on The REBA Show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the REBA Show, homeownership, hear it from the experts.
And here on the REBA Show, we bring experts in their respective field to give you information as to the home buying process, if you're sustaining your home or if you're looking to sell your home.
Covering all the industry, lenders, realtors, title company, escrow officers, insurance agents, all volunteering their time to bring you information that you can use. Our guests are experts when it comes to home ownership, whether you're buying for the first time or whether you're maintaining or sustaining the home you currently have.
Or selling.
Home ownership, hear it from the experts in the Blue Stream.
Jump in.
Programming for the REBA Show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
You're listening to the REBA Show, homeownership, hear it from the experts, live from the Fishbowl Radio Network at Globe Life Park, Arlington, Texas, the American Dream City. Our guest today is Sandi King-Brauer with King Financial Services. My name's Leticia Gallegos, co-hosting with me today.
It's Sal Villalobos.
And we have learned quite a bit so far from Sandi. Thank you, Sandi, for being here. And so before the break, we said that we were going to talk about small businesses. We will talk about small businesses, but actually what's going on right now with the tax changes, right, Sandi? With the tax changes, we have a lot of changes between a 1099 versus a W-2 employee.
Correct.
So elaborate on that for us.
So a 1099 is basically a contract labor. Or you own your own business. So you're getting a 1099 for services that you performed as an employee, but you were not paid, but you weren't paid as an employee. So you're responsible for your own payroll taxes, which is 15%. So that's a big difference. Now, before if you were an employee, you could also take your expenses against your income and non-reimbursed employee expenses. So that would be meals, traveling. If you're a salesman, you might be buying samples. If you were, a truck driver, you're doing, per diem as far as meals and hotel stays, that kind of thing. A lot of travel personnel, like airline pilots, train operators, had a lot of non-reimbursed employee expenses. That is not allowed as of 2018 anymore. The IRS spent way too much time trying to audit all of these unreimbursed employee expenses because everybody had them all of a sudden. It wasn't just the ones that, you'd expect to have them.
Right.
So they completely eliminated that. They completely eliminated moving expenses unless you're active military. There also theft and casualty losses. They eliminated that unless you're in a federally declared disaster area. So if your car got broken into, you can't write that off anymore.
How about amortization losses?
Amortization losses, that's for depreciation and amortization. So if you own property, yes, you can. That didn't change anything, but that doesn't change. That has nothing to do with casualty.
Okay. No, I'm just one.
Okay.
Yeah.
Yeah. Amortization, absolutely. That's for like a non-touchable thing.
Right.
Points on a loan.
Right.
Depreciation. Leasehold expenses. Depreciation is something that's physical that you're depreciating, like a house.
Okay.
Or a car. They did change 1031 exchanges, where before you traded your car in, you took whatever gain you had on that car and you rolled it into the next one, and you just changed your basis if you're in a business. Now you can't do that anymore. You have to show that trade-in as a sale, whatever you got for that trade-in, show any gain or loss on that sale, and then have a brand new item for the new vehicle. The only thing that's allowed to have a 1031 exchange now is real property, which is a house or apartment building, land.
Great. Awesome.
So, yeah, and see some of the other changes. 2019, the big change is there's no penalty for not having insurance anymore, health insurance. Everybody thought that happened in 2018, and then I had to be the bearer of bad news when I was doing the tax return, saying, no, that's still in place. The law didn't go into effect till January 2019. So we do have that. You do still have to put your 1095A on your tax return if you had healthcare exchange help, your credit. You won't get your refund if it's not on the tax return, and it's going to be delayed probably 2 months at least if you have to fax that in afterwards. So that's a big deal.
Okay, we're listening to Sandi King-Brauer with King Financial Services regarding income taxes. And so if you want to join the conversation, listeners, we'd really like to see what questions you have that you need answered. The number is 214-431-5032. Don't hesitate to call. And so there's a lot of changes when it comes to individual tax returns.
Yeah, there's no more exemptions anymore. Everybody used to get $4,500 for every person that was on their tax return as a deduction. That's no longer there. But they doubled the standard deduction. So, used to be standard deduction was $12,000 for a married couple. Now it's actually this year it's $24,400. So a lot of people aren't even itemizing anymore, especially in Texas.
So how does that help a taxpayer?
You're getting more credit that you didn't even spend. So before it was considered that you had $13,000 or more in expenses. So if you had more than that interest or property taxes, you would show that you had more than $13,000 and you would itemize. Now that number is $24,000. So if your interest is on your house is $5,000 and your property is $10,000, that's $15,000. Well, they're still giving you $24,000 off of your taxable income. So they're going to send me
a check for $24,000?
No, I wish.
So how does that?
I wish. It actually comes off your taxable income. So if you had $50,000 income, now you're only paying taxes on $24,000.
Okay.
But before you got the exemptions off of it too. You don't have that anymore.
Okay.
So some people it helped, some people it didn't. I have clients that have 9 kids. That's $4,500 adds up really quick.
Right.
But then at the same time, instead of $1,000 for each child under 17 years old, now they give you $2,000 for every child under 17. So there's so many changes. It's hard to say, well, yours is going to be better and yours is not until you actually do all of the numbers and come down.
All right.
Okay, so what would you say, because this is home ownership here from the experts, and someone might be asking, well, what does taxes have to do with home ownership? It has a lot to do with it.
A lot to do with it.
A lot to do with home ownership. So let's be devil's advocate here for a minute. So some people are saying, okay, well, I used to be able to deduct my taxes and the interest on my loan on my taxes. reiterate what you said about the standard deduction and how that is probably more.
It is more than you would have on your interest. So do you pay $24,000 a year in interest on your property? I don't think so.
No.
Now, we do have high property taxes here, but it never adds up to $24,000 between the property taxes and the interest. Now, with the new law, the property taxes are limited to $10,000. So you can't even write off more than $10,000 on your property taxes. It's even worse in other states because it's the state taxes and the property taxes have to add up. It can't be more than $10,000.
So let's clarify that. So you're saying that if my property taxes, or let's say that I'm itemizing because I have more than
$24,000, yes.
$400 in itemized
24,000,
expenses.
yes.
So my taxes on my home are capped at $10,000
For the itemization,
for the
yes.
itemization.
Yes,
Okay,
they
so
are.
that's clarification
Right.
right there.
So you have to have $10,000 in property taxes, $5,000 in interest. You're at $15,000. Now maybe you give $15,000 in donations. That would apply. So then you'd be above it. And say you're $1,000 above it. What are you going to save? Maybe if you're in the 20% tax bracket, $200 on your taxes. You have to look at it that way too.
Okay.
It used to be in small businesses, people would go, I'm going to go buy a truck or something and save taxes. You have to look at how much you're actually saving on that.
Right.
Okay. All right. Really, really good information. So so that gives a lot of clarification on deductions and itemized deductions and standard deductions. Anything that stands out as far as a small business that you would recommend, or is it really no advantage to do, like you said, purchase a vehicle for the business?
Writing off square footage in your home.
Yes,
as
they
an
did.
office?
They did a simplified method now. It used to be bad to do that because you actually depreciated part of your home. So if you sold part of your home, as you know, as a realtor, you would have to declare that portion of your property as business property and have to pay taxes on it. See, right now, if you stay in your house for 2 years or more, you don't pay taxes on that house when you sell it. Right?
Right.
But if you declare part of it as business property, that's not personal residence, and that part of your property you'd have to pay taxes on. But with the new simplified method, you get $5 per square foot up to 300 feet. So you can get, a lot of money. I think it's $2,000 if I have to do the math, off of your house, but you're for your home office, but you're not depreciating it. You don't have to keep track of any of your electric bills or your gas bills or anything like that. It's strictly a $5 flat.
Wow.
For all of
great.
you use, and as long as you regularly and exclusively use that area for your business.
Interesting. Okay, so let's go into something we really we don't like to talk about, but we have to talk about. So, what happens if the IRS contacts you? What do you do?
There's several different kinds of audits. One is a line item audit, and they're just questioning one line item on your tax return, and they want you to send some expenses or send some receipts in. Generally, that's auto, and they want to see your logs, your auto logs. They want you to send that in. Or if something hit the flags and too much office expenses, they want you to send the receipts in. That's a pretty simple one. You can just make copies of it, don't send your originals, and send it back in, and you're done. Now, if they're actually asking for a full audit where they want to see you, then you need to find a professional to represent you. And I would say an enrolled agent, and go talk to them.
Why don't you just go by yourself?
Well, you don't know what your rights are. You don't know what the law is.
Aren't they supposed to tell me my rights as a taxpayer?
Well, it really would depend on who you get, I guess.
Right.
But no, that's generally not the way it works.
Okay. I'm just saying that because there's a lot of
That's generally not the way it works.
Right.
Now, if you are confident and you have every single receipt on every single thing
Right.
there, and there's nothing questionable, but most people don't know all the laws. For instance, gifts. Most people don't know that you're only allowed $25 per year per gift, per person. So one person, you're allowed to give $25 per year to. So if you're a realtor and you give them door knockers or something to hang on their door or a big basket for $50 and you write that as a gift, that's a big flag item for the IRS. Don't say gifts on your tax return.
Okay.
Now if you put a something permanently with your name on it, staple a business card to it, it's a promotional item because now it has your name on it.
So if you're giving out a wine container box
Mhm.
with your name fixated on a metal plate and saying
It's a promotional item. It's no different than giving out a pen with your name on it.
All right. Good, good, good. Okay, so how do you catch up on back taxes? Let's say I owe some taxes. How do I catch up?
Well, the best way to do it is make a payment plan. But what people will say is, I don't have the money to pay that. I can't make a payment plan. So the IRS is really good about working with you, and they have some forms, financial disclosure forms that you fill out. There's certain things that the IRS doesn't consider. Your credit cards is not one of them. That doesn't go into the picture whatsoever. They consider the IRS more important than your credit cards. And they limit you on how much you're allowed for housing and food and auto expenses, because they don't want you writing off a $5,000 a month house instead of paying them taxes. So there are some limits, and so if you go talk to a professional, an EA or a tax attorney or a CPA, they'll tell you what those limits are. So you fill out the form, and generally with my software, I can tell you exactly what your payment is going to be.
Okay.
With interest.
Well, yes.
Yes, I'm just.
All right. All right, so that's great information. You want to take another?
So I mean, how? Again, I brought this during one of the breaks. I have a client. Oh, I'm sorry, I'm getting all relaxed. Yeah. So I have a client or somebody that approached me. Not even a client. Somebody approached me and they want to buy, but they haven't filed taxes in a few years.
Well,
what do
they'd have to file at least the last 2 years in order to qualify for the loan, correct?
Right. But don't they have a historical?
They may have taxes due on their tax account where the IRS has determined they owe taxes and have done a substitute tax return for them.
All right.
So that's going to come up. So you can actually ask for a transcript of everything that's owed on your account. You can call the IRS and they'll send that to you, or you can have a tax professional pull your transcripts for you and tell you what the statute of limitations are, where everything's at, what your fees are, and everything.
But so from our standpoint, if a buyer then buys with only 2 years, we don't know what tax consequence they have from previous years, and where they may attach themselves to that one property that they just bought.
Well, generally the IRS will have a lien on their account by then.
Right.
So about the third year, they start putting liens on. So it'll show up in their credit.
All right.
They'll see it. So they have to, they're supposed to file those tax returns. Now, if they don't have any taxes due for those years, it generally means because the IRS figured out their tax return and they would have got a refund. And since they didn't file their tax returns, they don't get the refund.
What? So you can't use that for the down payment?
No.
Oh.
And any refunds past 3 years, 3 years or taxes is all you can get the refund back for. So you can't get anything any farther back than 3 years.
Just like your phone bill, you can only go back 2 months, 6 days, 60 days.
IRS isn't that bad.
Well, it's good to know because, I mean, I'm like, go talk to a tax preparer. Oh, let me go talk to my cousin who does our taxes. I'm like, no, you want to go talk to a CPA. I didn't know about IRS enroll agents. So.
Yeah. We're a little bit different. A lot of CPAs don't work in representation like we do. There's a lot of different options when you owe money to the IRS, and it has to do with how much money you owe. If it's over $50,000, it's one procedure. If it's over $25,000, it's another procedure. If it's under $10,000, you can just make a payment arrangement for under 72 months, and you really don't even need their permission.
Oh,
you can just declare it. So it depends on how much you owe. And where the statute of limitations is, because you don't want to make a payment if, statute of limitations is in a month.
Is it based on state, the statute of limitations? Or
No, that's all federal.
Federal.
Oh, that's absolutely federal. And they come down really hard when it gets less than 6 months on that statute of limitations. So generally, I have people walk in and say, I haven't heard from them in years, and all of a sudden they want to garnish my wages, they want to do this. I said, getting close to the statute of limitations. And that's generally what happens.
Oh, okay.
So you just figure out a small plan for the
Well, that's
last
good to
3
know.
months.
I mean, most of our listeners may not know this, so it's great information that you're sharing here.
And a lot of people don't even know what their taxes. I don't have the records anymore. I've moved 5 times. Those are easy to come by. We can pull everything that the IRS has. And generally, if somebody hasn't paid taxes, hasn't filed their tax returns in 2 years, I'm going to pull it anyways. Because generally, they don't know everything. And we want to make sure we have everything on the tax return that the IRS knows about.
And you can still amend it?
Oh, yeah.
Even though they generated their own tax return?
Oh, it's not a final tax return until you file it. But they can still assess the taxes.
Good to know.
And so that the statute of limitation doesn't start until you file that tax return.
Is that the same with businesses?
All taxes. Now, there is a lot of different rules on trust funds, which is money that you held out of your employees' paychecks and didn't send in. There's a whole lot of different rules, and you never want to get involved with trust fund taxes due. So that's a whole nother hour.
All right. Well, let's take another quick break. And when we come back, we'll talk more with Sandi King-Brauer with King Financial Services about income tax. She's an IRS enrolled agent. And we'll talk about more serious stuff like when you owe taxes. That's serious, because I think a lot of people may not understand the true. The IRS is really serious when it comes to what we owe in income tax, and we talked a little bit about liens, and let's turn that into a home ownership thing. And what if there's an IRS lien on a property, that kind of thing. So let's take a quick break, and when we come back, we'll talk some more. Stay tuned. Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the HREBA Show, homeownership, hear it from the experts.
And here on the HREBA Show, we bring experts in their respective field to give you information as to the home buying process, if you're sustaining your home or if you're looking to sell your home.
Covering all the industry, lenders, realtors, title company, escrow officers, insurance agents, all volunteering their time to bring you information that you can use. Our guests are experts when it comes to home ownership, whether you're buying for the first time or whether you're maintaining or sustaining the home you currently have.
Or selling.
Home ownership, hear it from the experts in the Blue Stream.
Jump in.
Programming for the HREBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the HREBA Show, homeownership, hear it from the experts.
And here on the HREBA Show, we bring experts in their respective field to give you information as to the home buying process, if you're sustaining your home or if you're looking to sell your home.
Covering all the industry, lenders, realtors, title company, escrow officers, insurance agents, all volunteering their time to bring you information that you can use. Our guests are experts when it comes to home ownership, whether you're buying for the first time or whether you're maintaining or sustaining the home you currently have.
Or selling.
Home ownership, hear it from the experts in the Blue Stream.
Jump in.
Programming for the HREBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations.
You're listening to the HREBA Show, homeownership, hear it from the experts, live from Fishbowl Radio Network at Globe Life Park in Arlington, Texas, the American Dream City. My name's Leticia Gallegos, President and CEO of the Hispanic Real Estate Brokers Association. You've been listening today to our show regarding income taxes, and our special guest is Sandi King-Brauer with King Financial Services. Sandi, you've given us a lot of great information. Thank you for being here again. Co-hosting with me is
Salvador Villalobos.
And so we're going to continue our conversation. If you want to join in and ask a question, please do so. The number is 214-431-5032. If we haven't covered something that you are interested in or have a question about, don't be shy. We've got the pro here. She'll answer the question, believe me. So we've been talking a lot about different aspects of the laws. Let's talk a little bit. I don't want to miss out on this because when we do these shows, we're live with you today. And today is March 17 of 2020.
Happy St. Patrick's Day.
Yeah.
Happy St. Patrick's Day, yeah. So we're in the midst of a pandemic in the United States and the world. And so when it comes to income taxes, there was a press conference this morning, Sandi, and they elaborated on how the taxpayer will be affected, or in a positive way, maybe. So can you kind of brief us on what happened this morning during that press conference?
Well, the IRS has decided that they are not going to extend the tax deadline of April 15th at this point. But they are going to extend the penalties and interest for 90 days. Now, there is a penalty for not filing, and they're not going to extend that. So it's just a penalty for not filing your taxes. They're giving you an extra 90 days to file your taxes. Pay your taxes. You still have to file them, but you can pay them 90 days later. And that's only, as long as the president signs off on it. I see no reason why they will not. The Congress and Senate has pretty much already approved it, so it's up to the president, and so I think it's going to fly. I'm hoping that they will also extend the deadline because, a lot of tax offices aren't even open at this point because they're working from home. They're working remotely. On my tax office, I have 2 of them, and they're working from home to keep everybody safe, especially our elderly clients. Mm-hmm. So until that happens, we still have to file our tax returns on time or file an extension. But if you do owe taxes, there won't be any penalties and interest for another 90 days.
Okay. So you bring up a good point that we've been asked to distance socially. Mm-hmm. We're here in the studio today, and it's because
we're not 6 feet away, though.
So it's because there's not a whole lot of people
Mm-hmm.
here in the studio. So I feel safe. I hope everyone in here feels safe. And so do you think then maybe they'll extend the filing date?
I'm thinking that if it goes on too long, if it stays for like the 2 weeks that's anticipated right now, I don't think they will. But if it goes on any longer than that, if it gets into April too far, I think they will extend it because tax returns it's going to be hard to get them completed. Now, you can always do an extension. But we're also running into people who don't have any money right now because there are servers, there are truck drivers or whatever who are not making any money because everything is shut down. So do they have the money to prepare their taxes? That's going to be an issue. So I think if it runs very much longer, I think they will extend the deadline. But right now, they're not going to let anybody know that because they want everybody to file.
That's true. Very, very good point.
Then you're rushing to file. You may not have all your documents.
You're still supposed to file by April 15th. That hadn't changed.
But unless they do the extension.
Unless they do an extension. Then you have until October 15th. Businesses will have, corporations or partnerships will have until September 15th.
September. Okay.
Yeah. And it's also true that even if you filed an extension prior to this announcement, you still had to pay
your estimated taxes or what you thought your taxes were going to be.
Exactly.
And anything that was still due after April 15th, when you finally filed your tax return, you would have had penalties and interest on that. So this being waived for 90 days.
Waived for 90 days. That's the announcement that we received this morning regarding our tax returns and our filing. Okay, to summarize, Sandi, you've given us some great information. Is there anything else that you can think of that we should be aware of as this as the filing date approaches?
No, you try and get your taxes filed. And if you're trying to buy a house and you have some taxes due and you have back taxes owed, all you have to do is make a payment plan. Once you have a payment plan in place and you have that notification from the IRS that you have a payment plan, you're welcome to buy a house. And, that payment plan will be figured into your debt to income ratio.
Of course, right.
But you're free to buy a house.
That's fantastic. Now, what about some of our listeners that may have had with these catastrophes of tornadoes and hurricanes, what can they do? I mean, is there anything that they can write off on their taxes? Or is there any credits that they can have? What is it that they can do?
As long as it's a nationally or federally declared disaster area, then they can take the casualty and losses on their tax return.
All right.
To show whatever they lost.
But here, let's say they didn't declare it Did they declare it here? I'm not sure.
I think that, no, I don't think they have in Texas. They have in California.
Right.
They have in some of the other states, but I don't think Texas has declared it a national disaster area yet.
So then...
I anticipate that coming. But you have to figure out what the casualty is going to be. You can't write off loss of income.
Right.
Then that's the casualty. The casualty is whether or not, you had your car broken into or something like that, or you lost property because of a tornado.
Right.
It doesn't apply to financial losses.
Right, but the house itself, they can the repair cost and that, or is that part of the $24,000?
No, it's not part. Well, no. Yes, it is part of the $24,000. To answer, the simple answer is yes. It is part of the $24,000. But you have to have it. Has to be a disaster. Has to be a casualty because of the disaster. So you can't say, well, I had some repairs on my house and because we had the coronavirus.
Right. Oh, no.
That doesn't apply.
Right.
So it has to be because of a tornado or some kind of national disaster.
But it has to be categorized as a natural disaster.
A federally disaster area.
Right.
So, yes. And that's
so some of our listeners that were impacted, that their houses were completely destroyed, that they can't habitate it, then they can't write.
Well,
only
they
up
can.
To 20,
well, no.
but it's not considered a natural
No, it's
disaster.
not up to 24. It's just that's a casualty, and that's a threshold. They're going to get 24,000 anyway. So unless they have more than 24,000, then they would itemize. The house burns down. It's worth 200,000. They don't have insurance. They get to write $200,000 of income off.
Okay.
The problem was, they can't really carry that forward like they used to. It's 1 year and 1 year only.
Okay. Good.
All right, Sandy. So one more question before we wrap up. So what are the qualifications to an offer in compromise versus a payment plan with the IRS?
I have so many people come to my office and say, I want to do an offer in compromise. Well, they have to qualify for an offer in compromise. So basically, if you have equity in your house or anything that you can sell to pay off your debt, the IRS is going to want you to do that. And they're going to say, no, you can't do that. You can't have an offer in compromise. If you have the ability to pay it back within the statute of limitations, they're going to tell you, no, we're not going to take an offer in compromise. They want their money. So the best solution is that if you have no income and no property, yes, you can write your tax. You can do an offer in compromise. That's about the way it works. If you have $100,000 equity in your house, you owe $50,000, but you can't make the payments, we do those financial forms, you do a payment plan, and you just pay the minimum payments that you have to pay, but you get to keep your house. You can't do an offer in compromise unless you're willing to sell all of your assets to pay the debt off or get a loan on them or refinance them.
So what's the benefit of an offer in compromise?
An offer in compromise, the debt is wiped away. You don't have to do a payment plan. You don't have to worry about if the fact that maybe I'm uncollectible right now, I don't make enough money to make payments, but in 5 years I get a great job and the statute of limitations are not up. They can come back and say, okay, now we want you to make a payment plan.
Okay. So bottom line is the IRS will get their money any way they can.
They want their money.
They want
way they can.
They want their money. And this applies to home ownership, to homes as well. There's homes out there that have federal tax liens on them.
And they want them sold or refinanced so they can get their money. Just like any other creditor. You can have a creditor can have a lien on it. It doesn't have to be the IRS.
So if the IRS is the creditor, let's say, then can they reduce that liability, or they're
To
going
sell
to
the house?
To sell the house.
Yes. It takes a lot of paperwork, and you really need an IRS enrolled agent to do it. It's even more difficult. It's easier for them than a title officer. We have to have a lot of paperwork. You have to a copy of the appraisals, copy of the tax records, copy of the loan, there's probably 15 different documents that you have to have, the contracts and all that, to prove that there's not enough equity in that house for the IRS to get paid back. That way they'll reduce their lien to the amount of money that's going to be available, and they'll let the house be sold. Now, generally, a title company, if I'm not mistaken, will take about a month and a half to do that process. Generally, we can get it done in about 2 weeks.
Oh, great.
All right. Okay, so you're listening to the REBA show, Home Ownership, here at From the Experts. So, Sandi, let me ask you this. What does home ownership mean to you personally?
It means comfort. It means warmth. It means my space. It means my quiet time. And it means the place where I can go for my good place, good feelings, and family and friends. I mean, I share my house. I tell new people, you've been here 30 seconds. This is your home too. Make yourself at home. This is where the glasses are. This is where the restrooms are. Make yourself feel at home. I enjoy going home and relaxing and enjoying my space and knowing that no matter what happens, this is my space.
That is awesome. And this show exists because we believe that every single person has the fundamental right to have their own home.
Mm-hmm. Their own space.
Their own space, their own safe place to call their own. And so that's why we do this show. And so here at the REBA show, we inform and we serve. That's what we do. And we bring you information about home ownership, whether you're preparing to purchase your home or whether you want to sustain the home you currently have. And so that's why we bring special guests like Sandi here to help you with that. So our hope is that you will engage with us here at the REBA show and become a loyal fan of this show, and let's make a difference. You can come back and learn more every Tuesday at 2 here at Fishbowl Radio Network. That's fbrn.us. We're in Studio A. So again, thank you so much, Sandi, for being with us today.
Thank you for having me.
Really, really appreciate you being here. Thank you for taking the time to be with us today.
And I hope you have another hour because we're going to keep on talking after the show.
Yeah. I'd be interested to know if our listeners would listen for 2 hours.
That's so.
You think they would?
Let's take a survey. Go to HREBAconnect.org and we'll put a survey up there. Give us a couple of days.
Yeah.
Well, this lady will do it in about 2 minutes. So.
Email us, rebashow@rebaconnect.org. That's HREBA show at HREBAconnect.org. And let us know if 2 hours is something that you'd want to hear. So this episode is available on a podcast on the REBA show page on fbrn.us. And you can also find it on any podcast app. You can also learn about topics that we have planned for upcoming shows on our website, rebaconnect.org. Just click on the REBA show. If you'd like to make a donation, we never say no to donations to continue funding this programming and other community outreach events. So visit our website as well and click the donate button. If you have specific questions, you heard our email address, rebashow@rebaconnect. Email us and let us know what you're thinking, what topics you'd like to hear. So again, my name is Leticia Gallegos, President and CEO of the Hispanic Real Estate Brokers Association. My co-host today
is Sal Villalobos.
Thank you,
See how I
Sal.
switch it up between Spanish and English?
Yeah, I like that. Yeah. I don't. Leticia Gallegos, that's me. How would that sound differently? No, I don't want to go there.
You can't.
Okay,
Leticia.
so we're signing off. Thank you again, listeners, for listening, and we'll see you next, or we'll
be talking.
We'll
at
be
you
talking
next
at you next weekend, next Tuesday
next
at
Tuesday.
2.
Happy St. Patty's Day.
Hey, this is Leticia.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the HREBA Show, homeownership, hear it from the experts.
And here on the HREBA Show, we bring experts in their respective field to give you information as to the home buying process, if you're sustaining your home or if you're looking to sell your home.
Covering all the industry, lenders, realtors, title company, escrow officers, insurance agents, all volunteering their time to bring you information that you can use. Our guests are experts when it comes to home ownership, whether you're buying for the first time or whether you're maintaining or sustaining the home you currently have.
Or selling.
Home ownership, hear it from the experts in the Blue Stream.
Jump in.
Programming for the HREBA Show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the HREBA Show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Hey, I'm Leticia. I've been a realtor for 15 years, and we bring you information from the experts.
And I'm Sal. I'm the co-host. I'm a loan officer for the past 20 plus years.
And we're with the HREBA Show, homeownership, hear it from the experts.
And here on the HREBA Show, we bring experts in their respective field to give you information as to the home buying process.